Rob, so it appears everybody wants an AGA, the traditional British stove. Can you tell me what's happened today?
Well, for a long time, we've known that AGA, which makes the product that well-to-do people in the British countryside use to know that they are upper class, has been subject of a takeover from Middleby, which is a big American appliance maker. And that bid was first announced in June. We got a firm offer on the table in July, and the company has accepted. Now, Whirlpool has come in and said, we'd like to have a look around. And AGA Rangemaster, the company, has said, fine, you can take a look at the books. We're going to proceed with the Middleby bid, but if you want to come in higher, okay.
Excellent. So what does the AGA business look like? What are their margins? What are their sales?
Well, not very good, in a sense. This may be because simply they make a very specialized product, these great big cast iron monstrosities that keep your house warm in winter. They do about 250 or slightly more, 250 million pounds of turnover every year. Their margins, their operating profit margins are in the low single digits. Growth over the last 10 years has been extremely tepid, almost no revenue growth at all. I don't know if that's because the product has gone out of style or because you never replace one once you've bought it. But one of the appeals of this deal is that the buying companies have much more scale and much higher margins, and presumably would be able to suck AGA into a global distribution apparatus that would finally squeeze some really good growth out of what is a very strong brand.
So if it's a strong brand then with low margins, what does the multiple look like? Was it a good price?
Well, in terms of premium, they did get a very good offer. So the undisturbed price, they got a 70% premium over that from the offer from Middleby. So they offered £1.85 per share. That was about a 77% premium. However, if you look at the multiple that is, if analyst estimates are right about next year's earnings, they'll do about 14 pence of earnings. There's not a lot of analysts. That may not be a reliable forecast. But if they do 14 pence of earnings, that's a multiple of just, sort of 14 times earnings. That's a lower multiple than Whirlpool or Middleby have. And if you think you can get the margins of this company up, you'd think there'd be a lot of profit to be made in buying this thing. So hopefully Whirlpool comes in significantly higher because they could be getting a significant amount more value.
Excellent. Thanks very much.